Hey everyone, welcome to another KER Market Quick Take. I'm Corey Fleck,
And I am Shad Markwitz.
and we are back for our second ever KER Market Quick Take to give a little rundown on the recent Metals Investor Forum in Vancouver that happened just last weekend and share some of our thoughts, what we're seeing in the resource markets. I'm sure a lot is going to be focused very much around precious metals as gold, silver, they keep breaking out, and the stocks, they keep completely outperforming those metals. So, Shad, I guess your first takeaway from the recent Metals Investor Forum in Vancouver.
Well, Corey, I rolled in on Friday night and got there in time for the big dinner function they have and networking mixer. And I was there from 7 at night till after midnight, talking to investors and company management teams and fund managers that were all bulled up. Keep in mind that on Friday, gold and silver closed at record weekly highs. Once again, well, silver was the highest level we've seen in 14 years and gold at an all-time high. So the attitude and the spirit and the sentiment was pretty encouraging. Everybody was all bulled up, but a lot of discussions about the drill programs underway, a lot of discussions about people's portfolios and how they were up, and even some scuttlebutt about strategic shareholdings that they were going to get from the majors and/or M&A deals in the works. So pretty positive environment. And then on Saturday, lots of presentations, lots of newsletter writers presenting their picks, and a lot of interested investors deploying money in the space.
Yeah, it's definitely a bull market. Very much what we were seeing at Beaver Creek carrying over to the Metals Investor Forum. And the thing that's a bit different, I think, with Beaver Creek Conference and the Metals Investor Forum is Metals Investor Forum does have more of that retail audience. And you could tell, I was there on Friday, you could tell there was just more people there. One thing that really stuck out to me walking around that conference, and it's not a big conference, there's, let's say, around 30 companies that were there, how many silver names there were. A lot of silver stocks. And the one thing that kept jumping out at me as I was talking to all these silver names, many of them new names or many of them in a way refocused on silver, how much their market caps have grown. There were a handful of companies without a resource, without a whole lot of news, some that are drilling, still waiting for results, all with market caps over $50 million dollars in the 60, 70, $80 million range. Again, there is news coming, but these companies were valued at single digit million, some maybe in the teen $1 million valuations not that long ago. It's crazy how much some of these small junior stocks have been re-rated, and the name that you keep hearing, you go to one silver booth and hear Eric Sprott is invested because he seems to be in every single silver stock out there. Shad, you noticed that about those silver names? We didn't have a chance to talk about this, but to me, there are just so many more silver names, many new, some that were old, all worth drastically more than they were 6 months ago.
Yeah, I was having the same effect. In fact, when I walked in, I was seeing silver on the signs, and I thought some of them said something different, like that they were major companies, but their names were just similar to operating companies. And so I was like, wow, there's a lot of silver companies here. There were quite a few copper plays there too, which I thought was interesting. But yeah, silver was dominating the show. And rightly so, because silver's finally started moving. But it just goes to show that behind the scenes, the industry has been either relaunching companies or repackaging their projects to focus more on the silver content. There was money being raised. There was drill holes being drilled. Yes, Eric Sprott and many of them. And even some companies that were a blast from the past that I hadn't caught up with in years were there, but refocused and their share price, to your point, going higher. So I was impressed by the focus on the silver. And it seemed like in talking to investors that were there, they were there trying to pick up some of these silver companies. So I don't know. What was your experience talking with other investors? What kind of a buzz did you hear from the other retail people there?
A lot of people, in a way, almost feeling like A, they had missed the run in these small silver names, but also scratching their head saying, these guys don't even have a resource. So hard to really value any of these companies before they even have a resource, before they even have some drill results out, or they just have a small drill program where they release some results. So I feel like as excited as many people were for these silver stocks, I'm really just speaking of the small ones here. I did notice some people really looking in other directions. And I think copper was one that really stood out to me, that some of these copper plays just haven't moved. And that's where you can get pounds in the ground. for a lot cheaper than some of these silver plays. But the one big thing that I was also going into that conference with was financings. You mentioned just how many financings there have been just last year. On a small radar that I have of small cap companies, I saw over $200 million being raised, many of these bought deals, and a lot of these now all share financings. Yes, some done at a little bit of a discount to market, but nowadays when you release news on a financing, the stock goes up on the back end of that. And now we're not seeing warrants put in. So this financing window that we've been talking about for a few months now, it's ramped up and it's to levels that I quite honestly haven't seen, especially for the junior space where these guys don't need to issue warrants and these are bought deals, totally different than these non-brokered financings we've been seeing over the last number of years, if not decades. So Shed, you mentioned financings. Obviously, people are talking about them and companies are cashed up. But man, oh man, we haven't seen this environment in a long time.
Well, from one standpoint, I kind of like seeing some financings going on that don't have the warrants attached, or maybe only a half warrant. But the other discussion around warrants was the investors that are now considering if they should exercise their warrants, and companies that had warrants that were being exercised early because they were in the money and bringing in capital to the company, which we also haven't seen for a while. A lot of times warrants were expiring out of the money instead of in the money. So in this case, companies are raising money through warrants, but they're not really issuing warrants on these new financings. To me, that seems like a healthier market.
Oh, it definitely does. And honestly, it's the first time in my career that I actually have a warrant portfolio that I need to figure out what to do with. It's a nice problem to have, but it is one of those where there's a lot of shares, a lot that are coming into the market over the next 4 months because there's been so much financing done. A lot of this money is getting put into the ground, which I'm encouraged with, but there's going to be a lot of liquidity to chew through here. I'm very curious to see how the end of this year goes. And metals prices, if they keep going higher, then it won't be a problem. This market has new investors coming in. There is a churn of capital. We'll be able to deal with these billions of dollars of new issuance that have come and will be coming into the market. But we do need to understand that while there'll be a lot of news, we're probably going to see higher volumes because more shares are going to become free trading. And a lot of the financings that were done a few months ago, they did have warrants, and now almost everything's in the money. So I'm going to be very interested to see how the market digests this upcoming liquidity.
Yeah, there's going to be a lot of it for sure. There's going to be a lot of churn in companies, and it's going to be interesting to see also, does all this money that's been raised and does all the financial part of the business that you need to do to fund the work programs lead to value creation? What scares me a little bit is we've been talking about this off mic a couple times. There is an amazing amount of money that's been raised in the sector, not just at the companies, the 30 companies that were at this conference, not just at the companies in Beaver Creek, but across the board, whether it's the US, Canada, Australia. Companies are not just raising money, they're upsizing it, they're being oversubscribed. And because that's all dilutive, the question is how many companies out of there will actually beat the race against dilution by building more value? Are you worried that a lot of this money is just going to be wasted or blown?
Yeah, of course. I think we always are. I don't know if I'd just say wasted because there is a lot of drilling going on, but the fact of the matter is it's expensive to drill. It's hard to find something. The market is rewarding good drill results, but these companies are going to have to go back to the market again. So it really is this capital window. And to me, it does also just all talk to the underlying market, how strong the metals are going to be. We do need to understand gold is closing in on $4,000. Silver opened this month, September, at $40. It's going to close close to $50. That is momentum right there. GDX in the last 2 months is up almost 50%. And the junior stocks are even outperforming the GDX. So to me, I think there is an opportunity here to get ahead of some of these liquidity events. And I think take some profits, not take total money off the table, but take some profits. And quite honestly, I'm looking at now copper plays, copper with ounces in the ground that haven't been revalued because copper is also up 10% from that tariff news washout, closing in on $5 again. I think that's where the next opportunity lies. But that being said, I wouldn't be selling out of all of my positions in precious metals because even if we see a slowdown in the sector, if these companies come out with good news, it doesn't matter what the metals price does in terms of slowing down. These stocks can move 15, 20, 30, even 40% off of good news, even off of these higher levels. I am just a little bit more concerned and worried about these pre-resource companies that will not have a resource coming out and some of their valuations that do seem a little extended to me.
Yeah, and I think it's an interesting point about the money rotation because there's people that are scared to take profits in the gold and silver stocks because they know the moment they do, they're just going to ratchet higher and they're going to run away from them. But they also feel compelled to take profits. Curiously, and I went around and during the quiet periods when a lot of people were in the presentations and talked to companies at the booth, and two companies we have on the show that are sponsors of the KE report, in full disclosure, KOSA Resources, which is a uranium company, and Surge Copper, which is a copper pounds in the ground story in British Columbia, both of them said that they were having interesting discussions with investors that were feeling a little overexposed to the gold and to silver and wanting to rotate into copper and uranium to diversify. And I pressed my bets and said, really, how many? And a lot of their discussions were with people trying to find a different commodity to get exposure to besides gold and silver. Did you find that same kind of experience where there was either investors or funds or companies that were seeing a little bit of rotation, like out of precious metals and into these other commodities?
Absolutely. Yeah, I think everybody is feeling overweight on precious metals because if you've held a position for the last 6 months, if not a year, it's up multiples of where it was, and that will move your portfolio. Look, it feels good and looks good watching these stocks keep moving higher, but we do need to take a step back and sometimes just reevaluate where we are with our portfolios. But that being said, copper just seems like such a no-brainer because a lot of people in the market talk about copper. Copper is a favorite in terms of commodity bugs, and we keep hearing about the lack of investment in copper, the supply shortage, especially going out a few years that we're going to see. All of that makes sense, and copper is an established sector and a big sector within the commodities sector. What was really catching my eye too is a lot of these rare earth type stocks that have been on absolute tears. I understand there's a lot of government investment coming, but some of these stocks that seemed to have a good story a couple of years ago, even last year, that were trucking along just fine, they have absolutely taken off. And I just don't follow the rare earth side as well, but that's what I wanted to ask you about is that these rare earth stocks that have just gone to the moon, how much more upside there could be still in them?
Well, and I think from a standpoint of looking at resource stocks, there's two camps in the rare earths. There's the companies that are doing the traditional exploration and mining, and there were some companies with exposure to it there and in Beaver Creek. But the ones that have just gone to the moon are the companies that can actually process and separate the 17 unique rare earth elements. And there's really 15, but then there's two other that get kind of lumped in with them. So when you think about MP Materials getting the government money, we've also talked to our friend Matt Geiger on the show about Neo Performance Materials and how that's gone up as a processor. But companies you've had on the show like Aclara or companies I've had on the show like Ucore, rare metals, have gone up ballistic. Nick Hodge on our show has brought up Kotech, which is recycling magnets. They're up 2 or 3x. These companies are up 300%, 400%, 500% as processors. So they kind of take up a different space. And now I think the money's starting to move into the deposits, the land banks, the companies that have exposure to rare earths. There's also, I would submit, a lot of interest in just other niche metals. Like we keep hearing about some of the other critical and strategic metals like antimony, tungsten. I mean, there's several tungsten companies we brought on the show that are up 200 to 300% just this year. Some of the antimony companies are up in a huge way, and U.S. Antimony, right before this conference, just got some of that government money as well. So do you think that some of this is flavor of the day and that eventually this fades out, or are these export bans from China and the desire by this administration to get domestic supplies, not just in the U.S., but Canada's doing this, Europe is doing this? Is it going to stick this time, or are we going to see critical minerals stay critical?
I hesitate to jump fully on board, especially in the rare earth side of things, simply because as much as the name is rare earth, apparently they're not all that rare. I'm not an expert in the rare earths area, but these guys do have their run. This sector, this subsector of metals, they go on these runs. I do like the processing aspect of it. That to me feels more real. But when you drive down into the, quite frankly, lower quality companies, the ones trying to develop resources, that's the harder side of the game, I think. So, as much as I'm interested in what the processors are doing, I realize there still might be run in rare earths, but to me, the markets are so opaque. And quite frankly, I've seen it before, and it's not something that I necessarily dive into because these markets are a little too small for me and they can change too quickly. The whole critical mineral side of things, the most encouraging thing for me is the government being supportive. We've talked about this for years. If the government supports it financially and through ease of permits or fast tracking, that's a game changer for the sector. And right now, we've actually seen the government come into some of these stocks and look at how well the market has responded to that. So that's the side I like. But Shed, you're more active in this sector. Are you going into these rare earth stocks outside of just the critical mineral ones and outside of antimony? Because that always seems to be tied into gold. But the rare earth stocks, more the deposit level outside of the processing level.
I'm not touching the deposits personally. I'm only in the processors. I've done quite well in the rare earth processors, and I'm just going to stick with what I got there. But I have gone into the exploration side of tungsten. And again, these companies are up multi-bagger. I'm not sure that they quite deserve that yet, but I'll take it. But it just goes to show there's a rabid interest in narratives. People want a narrative, they want something new, and they want to be in something that has the government support and really has a wider investing audience. I find that gold and silver attracts a certain narrative and a certain kind of investor. When you get into copper, it starts changing. When you get into uranium, it changes. But when you get into some of these strategic metals, there's some people that don't invest in many mining stocks, but they just see the importance of the supply chains and how there's a need for defense, or there's a need for our own domestic supply. So I think that's bringing in some different investors. But I want to run another idea by you, Corey. A lot of the newsletter writers that were at the Metals Investor Forum get to present a couple of companies. And most of these newsletter writers are guests of the show. People will recognize these names: Brian Lenny, Joe Mazumdar, Eric Coffin, Jeff Clark, Chen Lin, Peter Kraut, and Goldfinger, Robert Sin. So these are the people that we have on the show to pick their brains occasionally. I noticed almost all of them going down the food chain into far more early stage exploration stocks, where maybe a couple of myths ago, or in their own portfolios and their own publications, they were playing it a little more conservative, let's say a year or two ago. So I'm seeing people that traditionally were bringing up household names going way down the food chain now into little bit earlier stage greenfields discoveries. Did you notice that same kind of thing, that they're now trying to stand out as a newsletter writer by trying to pick the next swing for the fences drill play?
Oh, absolutely. This is absolute bull market action because, yeah, everybody's going down the food chain. They don't care how recently companies have picked up these projects. Everyone now is all bulled up and they're looking for that 10 bagger because they've had so many wins. And quite frankly, I think a lot of people are saying, man, these stocks have really gone up. I need to find the next thing. It's to me mid to somewhat later cycle bull market action when we do start to see everybody going down to these much earlier stage drill plays or companies that have pivoted into these other metals. It's still a good market because of the fact, again, see above all the financings that have been coming out. So these companies are cashed up. I'm sure there'll be good stories that come out of it. But yeah, everyone's getting way more risk. It seems to me, again, bull market action, but that all brings up the whole question of what do you do if you hold some of these companies, whether you held it for the drilling reason or not, but you're seeing the stock go up ahead of drill results. Yes, the company's cashed up, but we all know how quickly that money can go when these companies are going through major drill programs, and now they all have major drill programs. How do you trade around that? Chad, you're a more active trader. I'm sure you're in a couple companies that are earlier stage that probably have gone 2, 3x without these results. So what do you do?
Yeah, it's a individual quest. Everybody's going to be different. Personally, I'm still weighted more heavily to producers, royalty companies, and developers, but of course, I can't resist the allure of exploration companies and the treasure hunt with the drill bit. Now, when some of them have run a lot, I have taken a little bit off the table, but you're torn because if they just had a good result, you kind of want to stick around for the next result. If they hit the early stages of what they think is a big trend, let's say they're going for a copper porphyry, or let's say they're going for a uranium unconformity deposit, or let's say they're going for a gold, maybe a high grade underground. All of those things are going to require multiple drill programs. So I'm willing to stick with some of the quality teams that seem to have good science and give them another chance. And so I'm holding put with a lot of them. But if a stock is really running a lot after a hole and it's exciting, but it's not a barn burner, I'm lightening up a little bit because I don't know that they can keep that kind of momentum going and the same kind of percentage increase going over the propensity of time. But yeah, there's a lot of companies that really is case by case where if I like the management team, I like the thesis, I like the model, and they have yet even a bigger program on tap for next year, I kind of want to hold tight and see what they hit. But I'm not weighting those very high in my portfolio. I give explorers a lower weighting personally, but there were people at these conferences, both Beaver Creek and the Metals Investor Forum, all in on exploration, only holding exploration stocks, and taking outsized bets. Maybe they only have 6 to 12 positions and they're all explorers. To me, that's really risky, but it's nice to see the confidence that some of these investors have. What's your take
Yeah.
on going all in on concentrated bets on early stage exploration companies?
Don't do it. You know, we both know that, right? Don't get sucked into that. Or if you have happened to get sucked into that and you see some wins, take some money off the table. If the stock is 2, 3x where you bought it at, there's nothing wrong with taking a third of your position off or even half of your position off and riding risk free because I think we've all been through that story, that playbook where companies go up, you're worth a whole lot on your screen or on paper and you never sell. And then as the price drifts lower, you keep thinking it's going to come back and you just ride it back down. To me, we've seen this before. It's encouraging because people are excited. They're bulled up. Fact of the matter is, you play a little defense with some of those gains. Yes, the stock can keep taking off, but that's why you still hold some of your position and almost forget about it. Treat it like a long-term hold. If it goes back to zero, fine, whatever. You still made some money off that. If it keeps running higher, then great. You're making even more money. But to me, being all in on just drill plays, it's way too risky out there. I have no problem with holding companies that have assets, have ounces or pounds in the ground, even those that are in production. Those are the best places to be right now because they just continue to make money hand over fist. The development plays, there are still some question marks just in terms of building those and things that can go wrong in terms of building those. But again, at least they have an asset there. So yeah, this whole drilling and all the drill results that are coming and all the moves that these small companies can go into. Look, I get it. I've been investing in some of these tiny market cap companies as well, but I have no problem trimming right away because that's how you can stay a little bit more sane. And quite frankly, you still catch the upside. But anytime you can lock in profits in micro cap stocks, do it because those are at profits that can very, very quickly disappear. Shad, let's wrap it up here. Fact of the matter is, again, bull market mentality. Investors are going further down the food chain. We are seeing that with the share price moves. And everyone, come back to our website. Listen to all the company interviews we are doing. Last week, I think we had 14 company interviews, and that was with MIF coming at the end of the week. They're coming fast and furious. All these companies have something to talk about. So right now, listen to all the stories and pull up market caps and compare the stocks that you hold to the stocks that you're looking to buy and make sure it makes sense. Don't just buy it because you heard a good story and you don't think the stock is taken off or you think you're still getting in. Make sure you understand how these stocks compare to each other. I think that's hands down the most important thing we can do. Everyone, hope you enjoyed another KER Market Quick Take. Be sure to visit our website, podcast, and YouTube channel, as well as our Substack account to stay up to date with all our market commentary.